What is up, you guys? It's your boy Chevy Shambles here. So today I want to talk about a stock that I think could be really special. That stock being NIO. Now I want to mention this is not meant to be financial advice, but I do think that this stock is potentially very special. Now we see here the analyst average target price according to Market Watch is 121.03, and the current price is $9.99. Now I don't know what kind of time horizon they're looking at, but this is a huge variance uh, between the current price and the average analyst rating. Now let's take a look at why they might be saying this. So here we see the market cap of $16.3 billion. So this is the valuation the market is giving to NIO is 16.3 billion. Now if we look over here, we have the total equity of NIO. That is the assets minus the liabilities at 38.06 billion. So the market is valuing this company at 16.3 billion, but the total assets of the company minus the liabilities is almost double that, is more than double that. So that is obviously very good, right? Obviously interesting enough to get us somewhat excited and want us have us wanting to do more research. So let's take a look at let's take a look into why this difference might exist. Why the stock price is so low, and why analysts think it's going to go way up. Now, and here's why, right? The earnings. The earnings the past 2 quarters have been terrible. They did bring revenue up year over year, but income is down. Profit margin is down, and operating income is down, and the cost of revenue is up. Same thing for June of 2022, right? Revenue up, net income way down, net profit margin way down, operating income way down. But if you look back to March, we see that almost everything is up. Operating income is way down, but everything else is up. And not up a small amount, right? 24 on revenue, 60 net income, 70% net profit margin for March 2021. So what happened between March of 2022 and June of 2022? Well, Shanghai went into lockdown after a COVID outbreak. So the company stopped having workers at its headquarters and any plant that it might have out in Shanghai. Shanghai represents 2% of China's population that were not interacting, that weren't transacting business, that weren't buying product, that weren't driving back and forth. So we see a narrative starting to emerge. We see a stock that tanked its last 2 quarters and did so in the wake of a COVID lockdown. And that caused the price to decrease drastically. That's what we think is going on. Let's take a look and see if that's correct. We can look at the 1-year chart. And we see in January, it was $27. February, down a little bit. But then, oh no, going into March, it hits 14 and it never really recovers. And this was obviously the release of the latest earnings report, caused it to crater. This, I would imagine, is the impact of the June earnings report, right? And we see this steady trend downwards. But if we look at the 5-year, it actually peaked in January of 2021 at $56. So what happened here? February of 2021. Well, come here and Q1 2021. Vehicle sales are up, revenues are up, losses are down. Maybe it was Q2 of 2021. Yeah. No, again, sales are up, revenues are up, losses are down, profit is up through the roof. What if we take a look at Q4 2020? That might hold the answers here. Not really. To look at it, I mean, sales up, revenues up. I'll be honest, I don't quite understand why this company started to tank. I really don't. We see it started to tank right in January, February of 2021, and just kept on going. Now here is when the COVID lockdown started, February of 2022, and it hemorrhaged, right? Since February, it's down $14. But even before that, I mean, being down $20 from January, I can't see a reason for it. Cannot see a reason for it. Let's take a look at some of the news. Or let's just Google search it, right? Why is NIO stock down? Why is NIO doing so poorly? We see here the COVID lockdowns being cited as a probable culprit. Will NIO ever possible? 28 of the American auto analysts said NIO is on the verge of breakdown. They anticipate the company to incur a final loss in 2023. Break even around 2 years from now. See, this is interesting. All right. So let's go through this article. This is potentially an important milestone. We thought we'd take a closer look at NIO's future prospects. NIO designs, develops, manufactures, and sells smart electric vehicles in China. $15 billion market cap company posted a loss in its most recent financial year of 11 billion yen? Analyst trailing 12-month loss of 9.6 billion, shrinking the gap between loss and break even. This path to profitability is a topic on NIO investors' minds. We've decided to gauge market sentiment. Turns out an average annual growth rate of 70% is expected, which signals high confidence from analysts. Should the business grow at a slower rate, it will become profitable at a later date than expected. This is written in November of this year. Yeah. We're not going to go through company-specific developments for NIO, given this is a high-level summary. Though keep in mind, generally a high growth rate is not out of the ordinary. High level of debt. Typically, debt shouldn't exceed 40%, which in NIO's case is 57%. Note that a higher debt obligation increases the risk around investing in a loss-making company. Now, I wanna speak to this. I did notice that the debt was somewhat high. It's 20 billion, I believe. Take a look right here. Yeah, 20.15 billion. Which is a little bit high, but also the company, if they haven't been doing that well, if they haven't been growing as fast as they expect to do, if they're going through a rocky period right now, it's possible that their debt has been growing steadily as they try to ride this out. I wouldn't worry too much about the slightly high debt rate. Now, there were some mixed reviews. There were some mixed signals there. NIO is not a profitable company, and it is therefore an immature company, we could say. It is a company that still has to solve some fundamental problems in order to get to the point where it is able to generate profits and generate income. It's a very speculative bet at the moment, but one that could pay off. But it is an immature company. Certainly, it is a company with a lot of volatility baked into its current business trajectory. But I think it could be a very special company, especially at the current valuation. One thing I would like to do a little bit more research on is who is William Li? Um, he's the CEO of NIO, right? Um, but what is his background? Uh, business executive, entrepreneur, co-founder and CEO of electric car manufacturer NIO. It does NIO. So he is relatively untested. See, this is one of those things. This is why you do your due diligence, right? Because it looks on the outside like a very, very, very cheap company. You are getting 38 billion? 38 billion in equity, right? The company value on paper, the value of its assets minus its liabilities is 38 billion, but the market cap is 16.2 billion, 0.3 billion. So on the face of it, it looks very cheap. And then you start to dig into the earnings reports, and you see a little bit of trouble, but you can explain that away as trouble caused by the Shanghai lockdowns. And you might say, as we come out of that, we see a potential to gap up. But it hasn't made money. It's not going to make money until 2024 at earliest, seemingly. And its CEO is relatively untested, relatively new to this this sector of the economy. He's never had an electric car company before. So what we have here, after the due diligence we've done, after looking into it, after engaging with this, we have a company that has extreme potential, but also extreme downside. A company that is untested, immature, but potentially we're getting the right price. And as the Shanghai lockdowns come to a close and the markets begin to stabilize as they move forward, we may indeed see NIO on an upward trajectory. And I think the moment we see NIO on an upward trajectory, the moment they gain even a little bit of traction, we'll see a spike. This is my thesis here, is that NIO is undervalued due to not just the Shanghai lockdown, but also the relative volatility in the markets, the relative bearishness of the markets, really not favoring companies that are acting without profits. We're seeing the market shrink back and scale back to a suite of companies that are very stable and very consistent in their returns. And we've seen this over the past year. But if you do your due diligence, which I encourage you to do, and find that maybe NIO has some hook for you, I think it could do great things in the future. And I think it has the potential, certainly, to be something very special. Until next time, I've been Shabby Shambles. Thank you for joining me. I hope you have a happy new year. Take care.